Good morning, guys. It's Chris from DaxTrader.co.uk. It's Thursday, the 26th of October 2017, and we're going to do a video for the Dax Technical Analysis for today. Excuse me, the usual trading disclaimer is open here. Have a quick read through that. And let's get started. So if you haven't been there already, go and visit DaxTrader.co.uk and you will be able to find all the technical analysis and more information about joining, if you wish to the premium membership, which will enable you access to signals and the journal and the live trading room, as well as webinars daily, all this sort of stuff. So go and check that out. But let's get straight into the charts, because we've got a premium webinar in not so long now. Excuse me. All right, so taking a look on the TPO today, the value area from yesterday was between 962 and 13 and 43. The point of control was at 1302, and there's a bit of a low volume node which we've just traded in this morning and broken below. So we're now underneath the value area low, and it does look a little bit bearish at the moment. So one of the programs which I've built that I've been playing around with has flipped from sort of a range to bearish. It's changed its bias from bullish a couple of days ago to bearish now, and it's looking for an opportunity to sell. This morning there was one, but I told it not to trade within the first half an hour of the day, so that would have been a good opportunity. We'll see what comes out a bit later on, but these are pretty high reward to risk. In fact, it's about 7 to 1 that it offers on most trades. Excuse me, which is pretty good. All right, so with this in mind, I mean, a retracement back up towards that level would be interesting. There's also an opportunity to sell from about 1335 or nearer to the tops of these value areas from the last sort of week or so. On the 4-hour chart, haven't quite managed to retest the underside of this median line from a previous daily fork, but still following a similar trajectory, and not really much to gain from this particular one, apart from the fact that you can see, as we have been watching in the last few days, this triangle pattern form here. And we'll look at that in more detail in a moment. This is a different daily fork. This is the main daily fork, which is providing the bias, and we've been looking at for the last sort of week or so, zoom through a median line, retracement of that median line, and holding 909 would still allow us to potentially be bullish here. But we are really close to leaving that behind now. If it is bullish and it builds from here, then you'd imagine price is going to go off to test the next median line, which will be way up there, the upper median line parallel. But it's got to hold this median line. It's got to hold that 909 level, because if it does crash through that and fail to make new highs, then you'd imagine it's going to come down to test this consolidation area previous. As far as the daily pivot's concerned, the daily pivot for today is at 977 with FXCM. The daily R2 is up there at 1313, and the S2 down there at 842. It's unlikely going to trade outside of those levels, but you never know. If we do break through the daily pivot, then we've got some resistance up here in the form of this pocket. It's previously zoomed through it, previously held price underneath it. So you can imagine it's going to do the same thing. That is where sellers are sat right now. So buying into that would be pretty dangerous. But if you were going to be selling, then that is an opportunity if it gets there. So we'll see. If this particular move is a bit of a zigzag, then we could probably project that by just pulling a quick 50 tool on the Fibonacci. And yeah, actually, if that was to be the halfway point of a move higher, halfway point in the middle of this, so it's kind of going to get this sort of move. Then that 50 point calls the move perfectly straight into that resistance zone, and then an extension of that move would allow the sellers an opportunity to get short, possibly. So we'll watch that. Excuse me. We'll keep an eye on that one. As far as the VWAP goes, this is a 100-tick chart, pretty granular. I can probably start tying up a couple of the things that are on there. But yesterday, just look at how it widened that band. In fact, that is actually a nice balance point there, isn't it? So look at that zigzag we just talked about. Okay, it's not quite exactly in the middle, but you'll spot that that little area there is pretty much roughly halfway between that move down. So that's quite nice when you find those sorts of things. But the little, well, quite a large sort of zigzag in the middle of that move, potentially an area in the middle of that one there as well. So you can spot these moves as they're happening. But yesterday, I think a lot of people were expecting a move back towards VWAP after being so far below the deviation low, and I think a lot of people would have gone long here, got stopped out as it broke through again. And then some people would have gone long there and got stopped out again. So it was just a horrible day for buyers yesterday. I walked away probably somewhere in here, so I'm kind of glad I missed out on that. But I know a few guys in the premium channel did get long there. And so well done, guys. That's a nice trade. I'm sure you're probably out of it now, but if you're not, then you must have ridden this bit out here. So I did actually tag yesterday's VWAP on open this morning. And today we're just widening the band. So we'll see. We're probably going to start to test the deviation high here. But if we do fail, then that's the opportunity as well to get short. This is an interesting fork. This is on the 2,500 tick chart. And I kind of came across this by just looking at ACR lines. So by ACR, I'm talking about action center reaction. So if we consider a center line using these previous kind of areas here where we had that push line there, and let's just say we use that, that's the center line, and then you take your action line up there, which was a previous point. Notice how it comes down to test a reaction line there. Now that's not actually the best line, but it gives you an idea at least of what we were looking at. If we pull it into the sort of the bodies of the candles rather than the wicks, it calls it a little bit better. And then what you can do is you can extend that line down because it broke through it. So if we just extend it through, notice how price is kind of calling it again down here. And another way you can do this is to just simply pull a pitchfork from those two lines there. Price broke below the lower median line parallel, so you can draw in a warning line. In fact, I can just actually use a default preset. And notice how it called it perfectly. Yeah, so all it's done is added the quartiles in here, changed the color, and added these warning lines either side of it. And so price broke below it, and it's called that. And so far, it's holding right inside that swap zone. So this is a battle area, and it's really difficult to trade when you get into these sorts of zones where you're finding pressure from both sides. I guess every day you're going to find those sorts of areas. You can always look for a reason to find, an area of a battle, but this is a proper one, in my opinion, because this is on a trend-defining kind of area, and it's wavering between that point. So we're going to keep an eye out on that and see how it develops for the day. But so far, the bulls are hanging on by a thread, and it's really quite a fine thread. But a lot of arguments are starting to stack up now against that, and the sellers look like they're starting to wrestle back control. Okay, so this line was pretty much the line that was broken from the ascend. It's not even an ascending triangle, just a triangle formation that was developing there. And it can't continue to coil up. It will often burst out. And it has. Now, I think I mentioned yesterday in the video that what I'd wanted to see was a breakthrough the trend-defining low, and it didn't do that. So what I meant is, even if we do get a break below this triangle, it doesn't necessarily mean it's a full-on reversal, technical reversal to the downside, because we have to break that trend-defining low. So yeah, it came out with a bit of momentum, but it's bounced from that level, and still it's within the range. We're in that kind of that range. It's quite a big range, but it's still in it. So it needs to break out to lower. So what are the strategies then? So if you're bullish, then obviously that would have been the spot to buy. It would have been quite aggressive, would have felt like a knife catching trade, but it would have been relatively small risk reward because you'd just put your stop underneath that low, go long there, and it's up to you where you place your stop, your target, but you're getting easily 3 to 1. If you're fading the market short, and really you'd want to be getting at least 4 to 1 on your money, and so a couple of spots would be somewhere around the underside of this break, and maybe you put your stop underneath this first one here, but I'd really want 4 to 1. So this is going to need to be a pretty big trade, full-on reversal type trade. So actually going to struggle to get those sorts of odds. So I'd probably have to play the price action on a smaller time frame to try and find out where those levels would be. But looking at kind of getting an order in somewhere around 13.30, and that might provide the reward to risk opportunity that I want, and that would mean getting in somewhere up there. So that's to the downside. So as far as longs go, I mean, if we break below 909, probably not going to be looking to go long today. I'm going to retain more of a bearish bias. But if we do hold that, then there's opportunities to get long back on a test of the area. So we would have had a point of ignition. I mean, there's engulfing candles here, and there was an ignition area here. So a test of one of those two zones would be interesting. Even a test of that area, because that was a point of this current move right now that's happening as we're watching it. So a test of one of those areas could also be interesting. Alternatively, something like an S2 would be interesting as well. All right, guys. So that is a quick summary of what we've just gone through. There's no webinar today, so this was just a video. John's taken the webinar channel instead for us today. Yeah, definitely looking a little bit bearish. I'm just going to have a quick check on that one last time. And so I'm kind of watching the oscillators. If we're staying below this red, let's call it the trend defining level for the program, then yeah, we're keeping our kind of bullish bias even pretty bearish at the moment. All right, and that's it. So check out the articles, kind of have a chat to us on the Telegram channel. The links will be in the description of the video below. And wish you a good day trading, and we will be back again tomorrow. Take care.